Hey guys, it is JP Fluellen here with Success Agents, and we are here with Jake Martin as our special guest today. And this is the podcast where we try to automate everything and make things as smooth as possible for you to do your business with little to no effort and get better results. And Jake, thanks for joining us today. And tell us a little bit about yourself and how long you've been doing what you're doing, and we'll take it from there.
Yeah, thank you so much. I appreciate you guys having me on the show. Man, I love lending. And one of the biggest things I'm passionate about is down payment assistance programs. And that's what I want to educate you guys about today. You know, I think so many people can get in homes and they don't even realize it, that they can. And I don't think even like many agents don't realize the programs out there. So as a lender here today, I just encourage you to know about these programs yourself, because I used to work for a high producer, JP, and we did $95 million in a year, which is crazy.
Wow.
But one thing that lender said to me was, we're never going to offer down payment assistance programs because we don't get paid on them the same. And so they didn't make money on them, so they didn't want to offer them, even though on the website it said they were an approved lender for Colorado's down payment assistance program out here. So I think, as agents, you got to know about these things. Otherwise, you're going to do a disservice to your own clients.
Right. So what would you say is a good percentage of the amount of assistance programs that you do compared to just like your standard, the conventional loans?
Great question. So what I like to do is I like to educate people about all their choices, right? Because how can someone make an educational choice if they don't know what the choices are out there for them, so that for the clients, especially. So I use a program called Mortgage Coach, and what that does is it breaks up into 4 different columns, about 4 different estimates that you can create. And so I can show them what a conventional loan looks like, FHA, and then 2 different down payment assistance programs to see if it makes sense for them. And so I think it's very wise to know these things to help your clients. Because, for example, if your lender's not offering these down payment assistance programs, and a client comes to them and says, "Hey, I want to buy a house. I don't have much money down," they're going to say, "Hey, go home, go save some money." But how many people can save 3 to 5% of a sales price of $300,000 relatively quickly, especially with sales prices increasing as well? It's difficult.
Yeah, definitely. So when a person's coming into your office and they're trying to get on one of these down payment assistance programs, what is it that they're going to need in order to qualify?
Yeah, I mean, it seems like it's kind of a big scary thing and that hardly anyone qualifies for them. It's such a lie, honestly. I mean, it's crazy. Like here in Colorado, we have one called a CHAPA, and there's a 4% grant and a 5% second. And this is actually changing for the worse. By the way, April 1st, all you Colorado realtors out there, you got to know your stuff. You got to have a lender that has some different options, different investors that they can help these people. We have one that's no money down and no MI. But anyway, for the CHAPA, all you need is a 620 credit score and an annual income of less than $115,000. And that is qualifying income, not household income like USDA. So we can kind of pick and choose as lender how we want to use their income, which is awesome. So
what's the difference between household income and qualifying income?
Great question. Okay. And this is why USDA programs can be very difficult to qualify borrowers for down payment assistance. So for example, if you're an 18-year-old living in your house and they're working a job, we actually have to use their income to qualify. And with USDA, there's an income cap, and it's pretty easy to get to the income cap depending on where you live. And so that's why sometimes USDA loans are very difficult to qualify people on, because they're very strict on their back-end DTI ratio, which is the debt-to-income ratio. That can't be over 43. And then also they can't make too much money compared to what county they live in. So it's a difficult program. So
I've heard a lot of people try to just bypass the USDA loans because it's and from my understanding is that it's income or it's funds available as well. So the government shuts down, there's no money, or if they're on furlough, there's no money. I mean, I've heard horror stories of people 2 days before closing and then the government shuts down and then they're out. They're just literally have to start over from scratch. And I've heard 4 months of, because there is no exceptions. There's, their DTI has to be like spot on the entire time. And
Yeah.
I've heard last minute refinancing their car just to get that extra $5 out of it
Right.
to get the deal done. But,
Yeah.
it's like one of those things. It's like you get so tied up in this idea of, well, no money down, no money down, there's no more options. I deserve to buy a house because even though I don't have any money, and it's like, okay, well, let's start off with the whole thing with the fact that you do need to be responsible,
It's true.
so maybe you shouldn't be buying a house if you don't have any money. Like I get
Yeah.
the fact that, we can assist until the cows come home, but you still got to make that payment,
Right.
So, so now, what kind of options, how many options are really out there in terms of assistance?
Yeah, that's a great question. I mean, we all know about like VA loans. Those things are like gold mines. If you get a VA client, that's like phenomenal. No money down, easily can cover the closing costs, all that kind of good stuff. But of course, I mean, you're going to advise your clients to go join the military. I mean, it might be a little crazy.
Sign your life away for 6 years so you can buy a house with no money down. Or you could save for 2 years and then just buy a house like normal. No.
Right. And so, honestly, one of the biggest products that we actually just got in-house is called Lakeview. It's an investor. And I mentioned it a little bit earlier. And so what that is, it's no money down, which is pretty awesome, and no mortgage insurance. So it's typically, you usually have to put 20% down to not have mortgage insurance. Well, this is an investor where they're willing to take that risk and not have mortgage insurance to help out their client. However, there is a 5% second that is added to the first mortgage. There's a second mortgage behind the first, and that's 5% of the loan amount. It is a conventional loan, and there's an interest rate that's 2% above the current rate. And so there is like a payment on that. But it's very competitive. I mean, it's a very interesting program. It's going to be the only option that I know of out there for people to try to do this little to no money down. Because, it doesn't always make sense to put a lot of money down as long as you have a good credit score, especially with that program. Because, for every $5 you put down, roughly it's going to change your payment about $1,000. I'm sorry, every $1,000 you put down is going to change your payment about $5 a month. So if you think about it, if you're going to save $5 a month, it's going to take you about 16 years to make $1,000. So, depending on the current situation, and that's why it's good to know all of your options so you can see like, hey, should I put all this money down or not? I've showed a client, hey, you can put 50 grand down in this house, but you can go ahead and put the 50 grand towards your debt of 18% credit cards and put very little to no money down in your house. And that is the option they chose. Because once you put money down in a house, you can't get access to it for free anymore. You got to get a HELOC or cash out refinance. I mean, you got to pay for that. So it's not always the best option. But yeah, it's good to know all your options. Have your clients, ask your lenders, how many options do you give my clients when I send them your way? Like, know about that lender, figure it out, make sure that they're doing what's best for your clients, because, it's all going to come back to you. And if they have a great job and they know their choices, it's going to work out best for all of you guys. So
nice. So, okay. So what's the rate right now? 5%, right? Roughly.
Yeah, 4.875. I have seen some at 4 and 6 days. So it's rates are definitely dropping right now. And I would say are you talking about maybe the Lakeview program, what that would look like?
So like if you're going to take out the second at 6 or 7%, right?
Yeah.
And how long is that? Is that still financed over 30 years then?
Correct. Yep.
Okay. So basically, when I bought my first house in 2007, which is like right when everything was going to hell and, hell was freezing over. I couldn't get my Ninja loan anymore, which is the no income, no job, no assets.
Right.
And I financed my first house at almost 7%. And that was the entire, that was with, what did I put down? 20% down on that one. And it was still at 7%. And I had a really good credit score. So I think that, I mean, and it was still affordable then. So, I mean, I think from a mentality standpoint, you know, if you're out there and you're listening to this and you're like 7%, holy crap, that's a lot. But think about it like this. You don't have 5% to put down.
Right.
So really you're only coming up with, you know, a monthly payment of like $300. So stop,
Right.
stop whining if you're listening to this and you're like, holy crap, that's a lot. There are credit cards with higher interest rates than that. And I know they're in your pocket right now. And you got a higher balance than 5% of the purchase price of a house. So stop whining. And that's fine. And that's not financed over anything. It's just, you know, APR. So it, you know, it's ridiculous. That's cool though. No money down, 5%. That's huge.
It is big. I mean, and no MI. I mean, where is that?
Yeah. Well, I mean, the MI is really in the percentage. It's the 2%. I mean, when you think about it, right?
It's a good marketing thing to say, though.
I mean, you know, it's psychology, but whatever. It's still less money out of pocket. So is that just a Colorado thing, or is that a national deal?
No, that's an international thing, which is pretty sweet.
Nice. Okay, so what about FHA? You guys got anything special going with FHA right now?
You know, that's a good program. You know, FHA, you know, we do have, you know, the CHAPA, you know, we can pair that with FHA. That is a Colorado only thing. But honestly, like, you know, with the Lakeview, you need a 660 minimum credit score for that program. So, you know, it's depending on your client's credit scores. I mean, if you have below a 660, you know, FHA is pretty much the only way you're going to go. And that's just 3.5% down. You know, there might be some local other down payment assistance programs that pair on to FHA, which I would look into. But yeah, you know, but by itself, it's still great. High debt to income ratios. You can really get people into home much easier than conventional sometimes. So
is it traditional guidelines for? Is it Lakeview? You said Lakeview program.
Yep.
So is it traditional?
Traditional.
And then,
however, of course, you know, buy like a second home with it. You can't get like an investment property. It's got to be your primary residence on that kind of good stuff. You can't have a non-occupying co-borrower on there either. So that's a little, you know, something to take into consideration. So it can only be people living in the property. So you can't have a co-signer. Gotcha.
And you have to have a decent credit score for that one.
So the interest rate is based off the credit score. So like a 660 credit score, you're looking at like a 6.5%. What you're talking about there. As you get, you know, above, you know, typically 740 is like and above is your excellent credit score. That is where it's actually much more competitive actually with current rates because it's way less risky for them to do that. So
nice.
Off of that.
So okay, so with that. Now, for brand new agents that are listening to this and they are kind of directing their clients on where they should be, you know, telling them in terms of what do's and don't do's. So tell me some of your like worst horror stories, and then tell me what are some of the common things that you find that kills people's deals.
Yeah, man, that's a good question there. Worst horror stories. You know, I think it can be easy nowadays, and I even heard this just recently. A bunch of like, there's been a higher ratio of pre-approval letters that have been sent out with people that actually have not been pre-approved, and I think it's because of the competitiveness of not as many people buying a house right now, especially, you know, during the winter and the spring, and then, you know, interest rates, you know, just a few months ago were much higher, like 0.5% higher than they are today.
Yeah.
So it was very competitive. So, you know, even though like a lender may say, you know, someone's pre-approved, you know, you got to make sure they're doing their due diligence. And, you know, one thing that we do at Fairway is we have called a scenario desk. And so, you know, if there's ever some kind of income that I'm just not sure about or whatnot, like I run it through an underwriting like scenario desk, and I want to get their blessing on this income before I say they're pre-approved. Because I mean, the last thing you want to do is get people under contract. You know, you keep going and moving forward. You think you calculated the income correctly, all this kind of stuff, and then all of a sudden you find out, you know, as soon as underwriting's looking at it, that hey, like you calculated this wrong, and now, you know, they can't buy the house anymore. Thank God that has not happened to me yet, but And I hope to never have it happen. I've definitely heard horror stories about that. And yeah, so you can't let, I have noticed that clients sometimes wants to like boss your lender around. Like I have some clients say, hey, if you don't get me pre-approved, I'm going to go to somewhere else. And you got to make sure like you're backing up your lender and saying, hey, like they know what they're doing. Like I know you want to buy a property right now, but you got to trust the process. Like it's not like getting, finance for a car where like you just state what you make and you can just buy it. It's a pretty in-depth process, and unfortunately with mortgage guidelines, like they want to be crazy conservative, and we can't change that. So yeah, just have a lender, make sure he knows what he's doing. And then also, one thing I do highly recommend, I'll just use a little commercial plug for Fairway. We have free credit help that we absorbed in-house. So, a lot of clients, will come to me and say, hey, I have terrible credit. Like, what can I do? And, it's really easy for many lenders and just be like, hey, just pay off debt, or, just say some vague things, go home and save some money and pay off debt and come back to me. Or like you can like try to enroll your clients in like a credit help program, and that costs like $50 to $100. I even heard $200 a month for credit help. I mean, isn't that crazy? Like, how are people? Go home and save for a down payment and pay $100 a month to fix your credit. Like,
right. Well, and not only that, but the way that they calculate your credit now is insane. Like, it's like, it's revolving credit, and it's like, well, if you pay off your credit cards too fast, and then that's a ding, and then and then it's like, available credit versus revolving credit versus credit ratios versus or debt to payment ratio. And it's like, if you do like some things you do could ding your credit versus you're like, no, I just want this crap paid off,
Oh, I know.
Like, dude, like I don't understand what I'm supposed to be doing right now. Like I have money to save, money to pay, money to just hang out, and sometimes they're like, oh, and then if you pay it off and then they cancel a credit card, then that's a ding against you too.
Right. Yes, you're 100% there, JP. And I've heard some horror stories too of someone who's like came to me and they said, hey, my dad told me to max out my credit cards because that shows that I'm like I'm using everything they gave me and like I'm doing really good. It sounds crazy, but it's like people don't realize that you're only supposed to use 30% of your credit limit. Where is that taught at all? I mean, unless you're really seeking these out and you're like a finance nerd like me, like you're not gonna like read articles about this. But
yeah. And there's like little tricks you can do. They're like, oh, dude, if you can't afford to pay it off, just see if you can get your credit limit increased so you can get to that 30%.
Boom.
Like, huh? But then it takes 30 or 60 days to post, and then you just don't ever really know. So let the experts do it. Don't try to fumble around and watch a YouTube video on this stuff, people. So because there's lots of really bad advice out there. And,
so I mean that's what's cool. Like I think I've got like 29 people enrolled right now in our free credit help. And what's cool is they email me monthly and say, and the client, and they're like, hey, how's it going? Are you following this plan that we created for you? All this kind of good stuff. And they'll tell us like basically when they should be able to buy a house. Like when should their credit score be where we need it to be to qualify for down payment assistance programs, or get that 740 credit score even. So it's really helpful. I've helped a lot of people increase their credit because I mean I know too about credit, but it takes time. We all are busy lives. We're all doing different things and trying to qualify people and whatnot. Like, and so it's just nice to have that free credit help to create that plan and get people on track, and so they're not like pushed to the wayside and forgotten about it, honestly. So
well, and it also kind of helps you realize that you guys care after, it's not just running the numbers, that you're like, hey, we're willing to invest in you guys if you invest in us to do what we can to get you to get into a house. Because I mean, for some people, like they might be the first person in their family that has ever bought a house, like ever.
So true.
And so like if there's somebody out there that can provide these kind of services out there, then that it's like, we're in this for the long haul. We're not just here to like get you through 30 days, you're out, have a good day. Hit me up for a refi or when you want to buy another one. All right, later.
Right. No, you're so right. I mean, we need clients for life, don't we? You know, like people like buy a house every few years or so, and that's the best way to do it. And so we just got to keep investing in our clients, and this is the best way to do it. Show them that we care. So, absolutely.
Yeah, I mean, there's so many people that didn't get really good financial advice as they were growing up. They're like, okay, what you need to do is go get yourself a department store credit card. Then when you get the department store credit card and you've been paying on that one for 6 months, get yourself a Visa card. And then after you rack that up for a few months, then go get yourself a frequent flyer card, and that'll cost you $200 a year. You know, and it's really all about how many credit cards you can put in your wallet, and nothing to do with anything else. And then if you can't pay them off, then just go ahead and file for bankruptcy, and then you're good to go. So, and I mean, dude, it's so bad because I've got a guy, one of my buddies actually, he got into some deep debt and you know, and then all of a sudden medical bills and all this stuff, and he owned like a BMW and a really nice truck and just all this stuff and just financed to the gills, you know, and then he's just like, I think right now I should just file bankruptcy. In 2 more years I'll be good to go. And that's really just, I mean, not the best way to handle your consumer responsibilities, in my opinion. But sometimes for some people that is the only option, because otherwise you have no disposable income, and you know, you can only do paycheck to paycheck for so long until you don't have a paycheck, and then you're screwed. So it is a good option for some people, but that's not the best option, because you may be able to dig yourself out in 2 years, or you might not. I mean, it might be just a snowball effect to the fact that you're going to have bad credit forever after that.
Yeah. Right. It's very hard to build up the credit even afterwards. It's very true.
Yep. So, what are the top 10 things that people do to kill their deal or spin their debt to income out of control?
Oh man, great question. You know, it's so easy to, you know, we all heard horror stories of buying furniture, right? I mean, it's like, you're buying this house. You don't want to just move in with no furniture, right? So, you know, it seems like people forget, or people think they can like sneak stuff by loan officers. And they're like, oh, maybe I won't tell them about this, and they won't find out, or this or that. I mean, I even had someone like quit their job during the mortgage process, you know, and it's like they're under contract and everything. And all of a sudden it's like, wait, you're not working anymore? You didn't think we would like find out that you don't have a job? Like, I mean, it's not like back in like the Wild Wild West, you know, where there's no telephones and stuff. So anyway, so stuff like that, like I'd like to tell people, it's like, hey, we took a snapshot of your life right now, your whole financial life, when you get you pre-approved, right? You know, but if you change something, like that snapshot that we took of your life and pre-approved you off of is going to change. Like, there's no hiding it. Because we have to do like a soft pull even before you close on a loan. So it's like, try to keep everything exactly the same as you have it now, you know, and pay cash. Try not to put, you know, here's another one too, is earnest money and cash. Mortgages, like the guidelines absolutely hate cash. So like, you need to get your money seasoned in a bank account. And what that means is it needs to be there for more than 2 months. So if you have cash under your mattress right now and you want to buy a house, don't be afraid. Put it in the bank account, all right? And because we need to have a story of anything that's over 50% of your regular paycheck. We need to say, hey, how did you get this? Why did you get this? You know, and you can't just say, oh, I sold some tires or something like that. Like, we need to have proof of ownership. So if you did sell some tires, we need to have proof that you bought the tires, and then we need proof that you sold the tires. So it is such a pain. So don't keep money under your mattress. Put it in the bank. It's going to be okay. So that's my number one thing. Another thing is try not to rack up credit card debt. You know, don't open up new loans unless the loan officer, you know, told you to. I like to say, basically, once you're applying for a loan, like, you're kind of like married to that loan officer. You know, you don't want to tell them, like, when you're married to someone, you want to make sure you tell them everything, especially about like, your financial situation. You don't want to like hide stuff, right? So same thing with the loan officer. They're your friend. They're your advocate. Don't try to hide things. Tell them everything before you do anything. You want to buy a big $100,000 truck, don't buy it unless you want to live in it. So
Yeah, if you're making payments to another
my
family that your wife does not know about and it throws your DTI out of whack, you probably should be. Full disclosure. I've got another family in Kansas, 4 more kids. Yeah,
Oh man.
unfortunately, sorry. I used to be a road
Yeah.
truck driver, and
My
just
bad.
one night at the gas station, next thing you know, I got 4 more kids in another state.
Yeah.
Yeah, so interesting. So, okay. Yeah, I've heard a lot of the same stories myself. And one of the things that people don't realize is that you guys get alerted when people like hit their credit.
Right.
So if a person's jumping in and they're like, I had this happen to me where literally the guy got pre-approved and had applied for a credit card before the application process, and it didn't hit his credit until 30 days in, or just right. And we had to, and then what, his DTI went out of whack, or his actually his credit score went down, and he like literally applied but didn't take it. So he got approved for the credit card, didn't actually like sign off on it. He just wanted to see if he could get approved, and then decided that it wasn't in his best interest for that.
Yeah.
So it was pretty nuts. And so basically we had to wait another 2 months for it to report again.
Wow.
So I'm echoing again on your end.
Oh. Sorry, my here we go. Let's see. Is it better now?
Yes.
Okay.
No, actually it's just clearer. It's a clearer echo.
All right. Is that better?
How about now? Oh, no, I can even hear myself better. It's fantastic.
It's good?
Yeah, I can still hear it. Yeah.
Sorry. I need to get I need to set up like you guys do. I'm just an amateur.
Well, one of the things that you could do is, yeah, actually that's good. There we go. Perfect. Yeah, it's getting a microphone and a little. Oh, there it is. It's back again. Awesome.
So echoing. Okay, let me. I think I know what I'm gonna do. I'm gonna do this. Yeah, I need to be more legit, man. I like you guys. You guys got.
Well, doing video is the new audio. Is video, because that's how you get traffic. That's how you get yourself more customers. But yeah, no, I'm not hearing myself echo anymore. That's good.
Good.
But yeah, so yeah, and I got this new little toy called a Tascam Mini Creative Studio. It's $100 on Amazon, and it like allows me to do all this other stuff. Like, hey, great point right there. Hey, good job. Thank you. Thanks, everybody. Appreciate it. I'll be here all night. I'm here all night. Give me the more applauses. I appreciate that. Thank you.
Right.
But yeah, so I don't know, anything else? Anything like what is it about you that makes you better than every other lender in the United States of America? How many states are you licensed in?
Colorado.
Just Colorado. Okay, so if you're in Colorado, you need to give Jake a call, because he is like the guy to go to. So if you're in like Durango, Colorado, or Aspen, or if you are, I don't even know where else other places are. If you're in Winter Park or Talk and you need to finance a new casino, don't call Jake, because he doesn't do commercial. But if you want to buy a cabin in the woods, give Jake a call. He'll hook you up. He'll get you 100% financing with 5% as a second. And that might free up some of your extra cash from your casino winnings to go buy another vacation property. Is there a certain threshold, like over a certain amount, that you guys can't do?
So we follow like the conventional loan limits. So we can go to, depending on the county, we do high conforming loan limits with it, but we can't go into the jumbo territory with it. So
like if I had a $3 million property, can you go that high?
I mean, I can, but I can't get you no money down.
Well, of course. Okay.
There's no limit on jumbos for me.
Gotcha.
So
I had a guy, he tried to do a $6 million loan, and his bank basically said, it's too risky. We won't do it. And the guy had all the money. He had 20% down, the whole 9 yards, everything, all of it.
Oh man, send him my way.
And they said it was too risky. So I was like, well, this was in Hawaii, so you'd have to be licensed in Hawaii.
It's almost worth it, I think.
I know, right? He actually got his license in all 48? No, actually, I think he's licensed in all 50 states now.
Wow.
Yeah, because of it was through one of the big banks, but for whatever reason, it was one of those things where they just didn't want to do it. Because I think that through the once you get a license through one bank, through one of those kind of banks, they kind of grant you the license and all of them.
Here's a little secret.
Yeah.
Here's a little secret banks that I don't think most people know about. So you can actually walk in, never do a home loan in your entire life, and say, hey, I want to be a mortgage loan officer. And they could just hire you and put you on staff, and you don't have to take a test. And you're licensed for every state. And you can start doing more.
Yeah,
so be careful.
That would be insane.
Because they're going to be this crazy hard test at 45% pass rate. So, make sure that bank loan officer knows what he's doing and he has experience, because last thing you want to do is get someone with no experience pre-approving your clients.
Well, to me, it's just weird. Like, even as a real estate agent, you got people that have never owned a house.
Yeah.
Helping people buy houses.
Yeah, that's true.
Think about that one when you're trying to sleep at night tonight.
Right.
Ask it. I'm under contract, and the people that I'm working with have never owned a home. What the hell? Like, I mean, dude, to me, that's just like one of those like no-brainers. Like, okay, have you ever owned a home? I mean, I guess the first question it should be before you even go get your license.
Yeah,
but there's 18-year-olds out there getting their real estate licenses, and I don't know. It's all about theory, I guess. That's the same thing with psychology. You're helping people through their life's problems, and you don't necessarily have been through every single problem. Like,
right.
I don't have a mistress in Kansas,
Right.
This problem you have here. So I guess it's all relative.
Hard to relate. Yes.
Yeah. All right, man. Well, you got anything else?
No. Hey, thank you so much for having me on. I hope I can come back. I mean, you're awesome. Thank you so much. What states are you licensed again? I want a little promo for you.
I am only licensed in Wyoming right now. Okay. But we're with EXP, so we can expand into any state without borders.
Nice.
So I can get somebody on my team in the Colorado area. Actually, that's kind of in the works.
Nice.
Yeah. So, and we actually have a guy that's licensed in the Colorado area on our EXP brokerage up here. So we could always refer out to, because we're one of the fastest growing brokerages nationwide right now. So
I heard great things about you guys.
Yeah. So, so where can people get a hold of you, Jake?
Yeah. I mean, feel free to give me a call, text me as well, 970-578-0005. And then I actually have a pretty handy little website called canibuyahome.org. Canibuyahome.org. There's actually 5 questions on there that is really simple and easy that people can click on, and they can find out within a few minutes to see if they're willing to buy our house or not. It's really so much easier. It's just trying to break that notion where people think they need to put 20% down, where people think they need to have perfect credit. It is not true at all. Let's get you into a starter home and just keep moving you up. So go to the website, check it out. Feel free to give me a call. Be happy to answer any questions. No problem at all.
Awesome. Well, thanks for everybody joining. And I am JP Fluellen with the Success Agent Podcast. And you can reach me anywhere on going to Google and typing in JP Fluellen. And I'm everywhere. You can also follow our podcast. We're on iTunes, Stitcher, YouTube. We're pretty much everywhere. So thanks for joining, guys. We'll catch you on the next one. And we are out of here.
Awesome. Thanks. Sweet.